welcome to Informed Investing. My name is Don Lawrence. I'm the CEO of STA Research, and our platform is StockTargetAdvisor.com. I'm a financial analyst and a trader, and today and every day we bring you top analyst ratings and we dissect them and we look at their validity and we let you know what we think of them. We're going to start off with Aurora Cannabis. We talked briefly before about cannabis growth and how about cannabis stocks and have been sort of hit really badly in general, and we do think that the valuation is becoming quite interesting now, so we're starting to I think it's worth a look and look at possibly taking a bit of a risk there and going long on some of these stocks. Anyways, we got Cowen and Company cutting the target to 185 from $4 on Aurora Cannabis and maintaining the neutral rating, and that is in Canadian dollars on the Canadian side. Over to Avis Budget, Barclays Capital is maintaining the equal weight rating and cutting the target to 158 to 223. We do think the stock might pop up into the as we're into the summer rental season there, but we do think the longer term that the stock could technically on the charts fall below $100 possibly into the autumn, so just keep an eye on that as sort of a risk factor there. Next we got Anheuser Busch, the American beer producer. We got 3 analyst ratings coming out on that. JP Morgan's cutting the target to 50 from 55. We got Deutsche Bank maintaining their buy rating, and they're cutting the target just slightly to 73 from 74. Citigroup is the upgrading the stock to buy from neutral. I agree with Citigroup here, upgrading to buy. I think when you get recessionary periods like we're possibly in or going into, sort of consumers turn to alcohol to sort of soothe the financial pain. So definitely those stocks tend to do quite well in sort of those rough periods. I think the stocks can easily take $60, the $60 mark there, and quite possibly looking at the longer term over in the next 12 months, it's quite possible the stock could push to $100, reach that previous high there. So we'll keep an eye on that. Next, we're moving into Alibaba. Alibaba's got 4 ratings today. Citigroup is maintaining the buy, cutting the target slightly to 172 from 176. And we got HSBC Securities maintaining their buy rating also and cutting the target slightly to 141 from 146. And JP Morgan is maintaining the overweight rating on the stock, and they're raising the target to 140 from 130. And ourselves at STA Research, we are maintaining the buy rating. We do have targets 138. We're quite positive in the stock here. We think it's of good valuation. A bit cautious, a bit more cautious than some of the other targets out there, but we will ratchet our target higher once we reach those marks. But I think overall, I think Alibaba is a very interesting and a good spot to look at accumulating some shares, albeit taking into the consideration of downside risk in the market there that might affect the stock going forward. Next, we've got Google. We got 2 ratings out on Google. We got Monness Crespi lowering the target at 2900, and we have Barclays Capital maintaining their overweight rating on the stock, cutting the target to 3000 from 3200. Looking at the charts, I think it's a good possibility that the stock might bounce to 2500, but looking sort of longer term in the chart, it looks a bit iffy. It looks like it might break 2000 there, so let's just keep an eye on that and sort of be cautious. Again, you know, anything can happen with you know, if we get more market pressure down on the downside, so just keep a note of that. So it's very, very hard to say. You know, obviously it's quite a big range there. You know, you could be trading between 1500 to 2500. So that's what we want to do. We always want to look at the range and see what the scope is. 2500 might seem quite aggressively low, but on the charts it says within the next year. So it's a possibility that, you know, if we do get some serious pressures, we could see those type of lows. So it's just something to think about. Over to Lululemon. Lululemon just announced, or Lululemon, however you like it, just announced they're expanding in Spain. I think the company should do very well over there. In Spain, they very much into athletic sort of apparel and stuff like that. I have a brother that lives over there, and they're sort of really into that stuff. Nike does very well over there, and so they should do well as they have done in other European markets like the UK. I think the stock right now is had a bit of a jump there. I think it needs to break 300 to go higher, but I do see it. Our target on that is 325, and we have upgraded it to sort of a hot buy, which is our version of a strong buy rating. We do feel that it's a good time to buy the stock. It's, you know, timing's everything, so we think now is the time to strike the iron when it's hot. So we could even see further upside to that, but it's definitely of interest here. Last but not least, we got good old Tesla getting rated by JP Morgan Chase. They are maintaining the underweight rating on the stock. Obviously, sort of a bearish viewpoint there. They're cutting the target to 385 from 395. So they do see a quite considerable downside there. Now, looking at the longer charts, it looks like quite possibly that stock could go down to 400, which is sort of a previous support in that area. So it's altogether possible. Again, going back to if you get those macro pressures in the economy and you get that downward swing in the markets and the rough sentiment, you could see obviously those shares dropping in price. But we might have a bounce in the meantime up to 900. So it's really hard to say here. Again, huge range you're dealing with. You could go from 400 to 900. Very difficult to know in between. I'd probably anything sort of be attractive under $600 to sort of look at nipping some of the stock up there if just looking forward there. But again, you know, when the markets are volatile, and you can accumulate. If you accumulate stuff, just hedge, buy slowly, buy surely, and when you're buying in increments, it's much safer than in large amounts there. So, anyways, guys, sort of an interesting take today. Some big names coming out, and a lot of sort of interesting valuations here we're looking at. Well, guys, thanks for checking us out. And if you're interested in more analyst ratings, please go to our website. On our analyst ratings page to get the best coverage of analyst ratings right around the world. And if you'd like analyst ratings delivered to your inbox every day pre-market and midday, sign up for a premium service. It's just $5 a month, and you get a lot of great research tools with that subscription also. Well, guys, we'll see you tomorrow. Remember, your best trade is a hedge. Cheers, guys.